Is the inflation crisis finally over? Over the past 3 years, Americans have seen a sharp rise in the cost of living. The overall consumer price index went up 21.8%. Of course, some items went up less and some a lot more. For example, car insurance prices rose 48%, and veterinarian services, 36%. But the tide might be changing. In August, Federal Reserve Chair Jerome Powell essentially declared an end to the inflation surge with what he called a soft landing. Does this mean prices will go down? Well, not so fast. Do not pass go, do not collect $200, because inflation is far from over. My name is Jim Angel, a finance professor at Georgetown University's McDonough School of Business. And I'm going to break down the 3 big challenges that will have a profound effect on how much you will pay for goods and services. Let's earn some extra credit. First, we need to talk about how we got into this situation. Expanding the money supply is like drinking at a party. It feels really good at the time, but if you do too much, you have a nasty hangover the next day. This is exactly what happened in 2020. In the pandemic panic, the Federal Reserve expanded the M2 money supply by 25.6%. When the Fed prints more money, it feels really good in the short run. Banks have more money to lend, and that pushes rates down. But soon you realize you have too many dollars chasing too few goods. Since 2020, we've been dealing with a proverbial hangover. But if we really want to understand the trends in inflation, we've got to look beyond interest rates and understand the 3 looming headwinds that will make it harder to fight inflation over the coming years. First, consider demographics. The American population is getting older. The baby boomers are finally retiring, and that means they're leaving the labor force, but they are still demanding goods and services. There are fewer workers supplying those goods and services. So, as we all learned in Econ 101, when you have higher demand and lower supply, you have higher prices. Problem 2 is dealing with climate change. The climate is getting warmer, the glaciers are melting, the sea level is rising. As the sea levels rise, we will lose a lot of coastal land. We will have millions of climate refugees. More hurricanes and more tornadoes will cause more destruction. Dealing with the cost of climate change is not cheap. It's pushing up the real cost of living for all of us. Third, we have the problem of deglobalization. At the turn of the century, we thought the Cold War was over, and we would all live happily ever after and benefit from free trade. Unfortunately, events in Ukraine, events in Taiwan, events in the Middle East tell us that we can't depend on globalization anymore. And guess what? When you can no longer buy goods from the cheapest producer and you have to get them from someplace else because the bullets are flying, that means the real cost of living is going up. So it's not just about interest rates. The real cost of living is going up above and beyond the monetary inflation hangover we are now experiencing. Again, it's demographics, it's climate, it's geopolitics. All of those things are raising the real cost of living. The Fed is stuck with a careful balancing act. If they pull back too quickly on the money supply spigot, they create a recession. If they don't pull back enough, inflation gets out of hand. Will they get it right? Well, look at Fed history. Humans run our institutions. Sometimes they got it right, sometimes they got it very wrong. The Fed overreacted in 2020, and we are literally paying the price now. Will they get it right in the future? Time will tell.